Okay, ma'am. After completion of this particular chapter number 8, various documents with respect to GST. The next topic we need to discuss is here payment of tax. With respect to payment of tax, what is the position, ma'am? With respect to payment of the tax. So what are the topics we need to discuss? We will see right now. Wait a minute. So, sir, what are the payments that are to be made in the GST regime? What are the payments that are to be made in the GST regime? If at all it is a intrastate supply. If at all it is a intrastate supply. Sir, what is meant by intrastate supply? If LOS, POS are in the same state or same UT, it is known as intrastate supply. If at all it is an intrastate supply, CGST plus SGST is to be paid. If at all it is an interstate supply, IGST is to be paid. What is meant by interstate supply? If LOS, POS are in different states or in different UTs, it is known as interstate supply. And if at all, wherever it is applicable, interest, penalty, late fee, these are the amounts that are to be payable by these are the amounts that are to be payable by what we can say, ma? Yes. That are to be payable by our registered persons in the GST regime. If at all it is a intrastate supply, CGST plus SGST is needed to be paid. If at all it is an interstate supply, IGST will be paid. And wherever applicable, interest, penalty, late fee will be paid. Okay, ma'am. For payment of all these amounts in GST, there is a concept that is known as e-ledgers. That means electronic ledgers. With respect to electronic ledgers, there are three types. Electronic cash ledger, electronic credit ledger, and electronic liability register. Generally, electronic liability register will reflect the total tax payable, and electronic credit ledger will reflect your ITC balance. And after netting of this particular ITC, what is the amount that is needed to be paid will be paid by electronic cash ledger. Okay, ma'am. So in this way, totally it operates. Electronic liability register generally will reflect total tax payable, and electronic credit ledger will reflect the ITC. After netting of this particular ITC, whatever the remaining amount that is needed to be paid, it will be paid by using electronic cash ledger. So with respect to electronic cash ledger, generally it will reflect all the deposits made in cash, TDS, TCS made on account of the taxpayer. It will reflect all the deposits made in cash and TDS, TCS made on account of the taxpayer. That means that electronic cash ledger will be credited by. That means electronic cash ledger can be compared with our Paytm wallet. That means Paytm wallet will not itself have any balance. We have to transfer the money from the bank account. We have to transfer the money from the bank account. With respect to that, the point we should remember is, here. Whatever the money that is deposited in electronic cash ledger, it will be reflected in credit side of electronic cash ledger. As well as whatever the TDS, TCS that was deducted, those amounts will be credited to electronic cash ledger. So the credit balance of this particular e-cash ledger can be utilized for the payment of any amount with respect to GST. It can be used to pay tax, interest, penalty, late fee or any other amount that is needed to be paid under GST. Okay, ma'am. This is the point you should remember here. This is the point you should remember here. Okay, ma'am. This is the point you should remember. So this ledger can be used for making any payment towards tax, interest, penalty, late fee, others, or any other amount on account of GST. Okay, ma'am. So electronic credit ledger generally will be credited by the deposits made by you, and whatever the TDS, TCS that was deducted on behalf of you, that amount will be credited to e-cash ledger. That amount can be utilized to pay any amount with respect to tax, interest, penalty, late fee. But it is not the same case with respect to electronic credit ledger. Generally, it will reflect the input tax credit as self-assessed in monthly returns, with respect to them. What we can say is it will reflect input tax credit as self-assessed in monthly returns. What is meant by self-assessment? First, what is meant by the word assessment? Here, assessment means what we can say is, assessment means determination of tax payable. Okay, ma'am. Self-assessment means how much tax that is needed to be paid will be assessed by the taxpayer himself, that is known as self-assessment. Here, in his monthly returns, what is the ITC available with him will be self-assessed by the registered person, and it will reflect in electronic credit ledger. Generally, it is based on GSTR 3B. The credit in this ledger can be used to make payment of tax only. That means whereas ITC balance can be used only for the payment of tax, the credit in this ledger can be used to make payment of tax only. That means output tax and not other amounts such as interest, penalty, late fee. This is the difference between e-cash ledger and e-credit ledger. With respect to e-cash ledger, that amount can be utilized for the payment of any amount with respect to GST, whether it is tax, interest, penalty, late fee, or any other amount. But whereas with respect to this ITC balance, it can be used to pay tax only. Interest, penalty, late fee cannot be paid. Okay. And what about electronic liability register? Electronic liability register generally will reflect total tax payable after netting. That means after setting of ITC, what is the amount that is needed to be paid? So that amount will be generally paid by e-cash ledger. Okay. So with respect to e-cash ledger, how to deposit the money in e-cash ledger? So the money can be deposited in any of these modes: internet banking, debit card or credit card, NEFT or RTGS, ODC, over the counter. Internet banking, debit card or credit card, NEFT or RTGS, over the counter. Okay, ma'am. With respect to that, internet banking, debit card or credit card, NEFT or RTGS, over the counter. With respect to that, internet banking, debit card or credit card, NEFT or RTGS, you can deposit without any limit. But whereas with respect to over the counter, 10,000 rupees per challan per tax period. 10,000 rupees per challan per tax period. That is the point. Okay. Now, what is the point here? Modes of deposit in electronic cash ledger. It can be deposited through internet, debit card or credit card, NEFT or RTGS, or over the counter. Over the counter means physically depositing the money. With respect to the remaining modes like internet banking, debit card or credit card, NEFT or RTGS, without any limit, they can deposit it. But whereas with respect to over the counter, 10,000 rupees per challan per tax period. Okay, ma. Sir, that means over the counter you can deposit only up to 10,000 rupees. Okay. Sir, is there any exception or relaxation to this point? Yes. With respect to non-applicability of over the counter payment limits on the deposits to be made by. That means this over the counter limit can be done by any of these people. To recover outstanding dues, that means proper officer, to recover the outstanding dues, including attachment proceedings or sale or movable or immovable properties. So what is the general rule? When you are depositing over the counter, there is a limit of 10,000. But whereas with respect to these cases, these exceptional cases, the point will not be applicable. More than 10,000 rupees also can be deposited over the counter. Okay, ma. First one, during recovery proceedings. So what are these recovery proceedings? When there is any shortfall or non-payment of the taxes, department generally issues show cause notice. For that show cause notice, the registered person does not respond. In those cases, definitely recovery proceedings will be initiated. So after recovery proceedings are initiated, initially the person's business assets will be sold. If at all they are insufficient to meet the liability, then his personal assets, mobile and immobile, will also be sold. Okay, in that case, at the time of selling these business assets as well as personal assets, what happens is, you should remember here the point. What happens is, how much amount you will get by way of sale of these assets, these properties, that amount can be deposited over the counter even though it is more than 10,000 rupees. Even though it is more than 10,000 rupees. This is the first point. And second one is, to collect the amount by way of check, cash, DD, or during investigation, enforcement activity, or any ad hoc deposits. Ad hoc deposits means temporary deposits. Generally, in order to take any case, any appeal, the tribunal or court sometimes ask the people to deposit the money in advance with them. In those cases also over the counter, if you deposit that even though it is more than 10,000, it is okay. And GST is to be paid by government department itself. That means here the point is simple. Let's say AP Tourism is there. AP Tourism Department will provide resorts and all these things on rental basis. Then it will collect GST from the customers. That GST will be deposited with the GST government. AP Tourism is itself a government department. So when GST is to be payable by government department itself, definitely you are liable to you can deposit more than 10,000 rupees over the counter. And in future, any persons notified by the commissioner, those persons also can deposit over the counter even though it is more than 10,000 rupees. Okay, ma'am. And in electronic cash ledger, there will be 4 major heads: IGST, CGST, SGST, UTGST, and cess. Each major head will be divided into 5 minor heads: tax, interest, penalty, fee, others. Every major head is divided into this like this. There are 4 major heads: IGST, CGST, SGST, or UTGST, and cess. Each major head is again divided into 5 minor heads: tax, interest, penalty, late fee, others. That means IGST will be divided into tax, interest, penalty, late fee, others. CGST will be divided into again 5 minor heads. Previously, cross utilization of funds across major or minor heads not possible. Cross utilization of funds across major or minor heads not possible. Okay, ma'am. But now, cross utilization of funds between major or minor heads possible. That means the amount deposited in the IGST, any excess amount is there, that amount can be now transferred to CGST or SGST also, and vice versa. If any surplus balance is there in CGST, it can be transferred to IGST also. Previously, cross utilization of funds across major or minor heads is not possible. Now it is possible. That means cross utilization of funds across major or minor heads is now possible. Okay. Next point is, sir, let's say for example, on this particular date, let's say on April 29th, we just gave a check to in the name of government, but the money was deposited in government account on May 4th. What will be treated as date of payment there? What will be treated as date of payment here? The date of presentation of check, or when the money is credited in the government account. Date of presentation of check is not. When the money is credited in the account of the government, that particular date is deemed to be the date of deposit of tax with the government. That is the point you should remember. Next one is electronic credit ledger. Already we know that. We are having the ITC of IGST. This particular IGST, IDC should be first utilized for the payment of IGST, subsequently CGST and SGST or UTGST also. SGST or UTGST also. Okay, ma'am. And IDC of CGST can be utilized first for CGST, subsequently IGST, but it cannot be used for SGST or UTGST. And IDC of SGST, first it will be used to pay SGST, subsequently IGST, but it cannot be used to pay CGST. Same point will be applicable to UTGST also. UTGST IDC first will be utilized for the payment of UTGST, subsequently IGST, but it cannot be used to pay CGST. This is the point. Okay, ma, with respect to electronic credit ledger. And next point is with respect to electronic liability register. With respect to electronic liability register, what is the order of discharge of those liabilities? With respect to electronic liability register, order of discharge of liabilities of taxable persons. Okay, ma'am. Order of discharge of liability of taxable persons. What is the position, ma'am? The position is simple here. First point, the order of discharge will be all the dues related to previous tax period. All the dues relating to previous tax period. First, whatever the amount that is available with us, it should be utilized first for the payment of previous tax period amounts. After setting off previous tax period amounts, any surplus amount is there, it can be used to pay the dues relating to current tax period. After paying that also any surplus is left, then that amount can be used to pay demand amounts that are determined as per section 73 or as per section 74. So what is the order of discharge of liability here? First point is previous tax period amounts. Previous tax period amounts should be first paid. After that, current tax period amounts will be paid. After that, demand amounts determined as per section 73 or 74 will be paid. Sir, what is the manner of making the payment here? You are having cash balance as well as ITC balance. What amount you will first utilize? First, we will utilize electronic credit ledger balance, that is ITC balance, but keep it in mind, this particular ITC balance can be used to pay tax only. Can be used to pay tax only. And any interest, penalty, late fee that are needed to be paid, or any deficiency in the tax amount that will be paid by using e-cash ledger. Okay, ma'am. Already I told you these things. Electronic cash ledger, credit amounts. That means ledger will have debit balance as well as credit balance. With respect to credit balance, any deposit made towards tax, interest, penalty, late fee. That means whatever the deposits that are made, whatever the TDS, TCS that were deducted, it will be credited to your electronic cash ledger. When the money is actually used to pay any tax, interest, penalty, it will be debited to the electronic cash ledger. Even if at all it is used for the payment of tax, interest and fee, generally what happens, it will be debited to the electronic cash ledger. And if at all any surplus that is there in electronic cash ledger, that amount can be claimed as refund. When you are claiming the refund, it will be debited in electronic cash ledger. Because the electronic cash ledger balance will be reduced if at all refund is granted to you. That's why that amount will also be debited in electronic cash ledger. And with respect to electronic e-credit ledger also same point will be. Whatever the ITC that is reflected in GSTR 3B will be credited to electronic credit ledger as ITC. And this amount can be used to pay for the output tax only, like IGST, CGST, SGST, UTGST, like that. So, when it is used to pay the output tax, then it will be debited to electronic credit ledger. What about electronic liability register? With respect to electronic liability register, generally payables will show debit balance, paid will show credit balance. Amount payable towards tax, interest, fee, any amount that is needed to be paid due to mismatch, all these things will be shown as debit ones. When it is paid either through electronic credit ledger or through electronic cash ledger, that amount will be credited. So, electronic liability register generally will reflect debit side, payables will be reflected in debit side, paid will be reflected in credit side. And last point with respect to theory here, interest on delayed payment of tax, section 50. As per section 50, interest is to be paid in three circumstances. If the person does not pay the tax amount within the due date, or if at all there is any delay in payment of that particular tax, any delay in the payment of that particular tax, then interest is needed to be paid. In the same way, excess ITC was claimed by the recipient, or excess output, the supplier in excess way reduced the output tax liability. In all these three cases, interest is to be paid as per section 50. First one, when there is a default in payment of tax within the due date. Second one, claiming excess ITC. And third one, reducing the output tax liability in excess manner by the supplier. In these three cases, as per section 50, interest can be charged. Sir, what are the interest rate? Normal cases, 18%. With respect to these two special cases, 24%. With respect to normal cases, 18%. With respect to these two special cases, 24%. That is the point, you should remember. That is the point you should remember. Okay. So, sir, on which amount interest is needed to be paid? Generally, as per the recent circular, interest is to be paid on the net liability after setting off ITC. That means the gross amount that is to be paid is 1,000. You are having the ITC balance of 700. In that case, the net liability will be 300. On 300 only, you are liable to pay the interest. Interest is not to be paid on the gross amount. Interest is needed to be paid on net amount. That is the point you have to remember with respect to theory, and we will see with respect to that illustrations. Wait a minute. So here, generally the problems are here with respect to payment of tax. So generally the problem will be like this. It will be asked in compulsory questions like this, like problem number 2. Mr. Ekant, a supplier registered in Delhi, is engaged in the business of sale and purchase of plastic raincoats. He furnishes the following information pertaining to inward or outward supply made by him for the month of July. Value of interstate outward supply to registered persons. That means interstate sale, IGST is needed to be paid. Intrastate outward supplies, CGST, that means output tax payable, CGST plus SGST. And intrastate outward supplies to unregistered. It is immaterial to whom you supplied the goods. They can be supplied to registered persons, or they can be supplied to unregistered persons also. In all these 3 cases, definitely GST is to be paid. These are the values. And next one is value of inward supplies from registered person, intrastate. Therefore, ITC you will get here is CGST plus SGST. And interstate inward supplies from registered persons. You can get the ITC of IGST on 5 lakhs. And unregistered person, when you purchase it from unregistered, definitely you cannot claim the ITC. This is the point you should remember. And some adjustments are given. Following additional information is also provided by Mr. Ekant. IGST credit on the capital goods purchased in the month of July. 1.5. So that means IGST, ITC of 1.5 lakhs is available. CGST or SGST credit on other inward supplies, including credit of 5,000 on account of membership of a club. In this 50,000 rupees, 5,000 rupees is relevant to membership of a club. With respect to membership of a club, the position is simple. With respect to membership of a club, the position is ITC is not allowed. So on 5,000, ITC is not allowed. Remaining portion, 45,000, you can claim the ITC. Avail consultancy services from Mr. Sujit, lawyer, located in Delhi, intrastate service. Being RCM, it is covered under RCM. Therefore, first initially, it will be added to the output tax liability. Because under RCM, recipient is liable to pay the GST. Whatever the GST that is paid under RCM, it is allowed as ITC. That's why again it will reflect in ITC also. It will be shown as output tax payable above, and it will be shown as ITC as also. Okay, we will see that later on. And these are the opening balances with respect to CGST, SGST and IGST. Based on that, some rates are given. CGST 9%, SGST 9%, IGST 18%. Based on that, you are liable to, you need to compute what is the net amount that is needed to be paid. We will check the answer. Wait a minute, ma'am. So, with respect to this point, so this is RCM concept, the legal services value 1 lakh, therefore CGST and SGST are needed to be paid, and already I told you this amount is allowed as ITC also, therefore you can observe this here, this one, it is shown as ITC also. Okay, ma'am. Next one is interstate outward supplies, therefore IGST is needed to be paid on 30 lakhs, 18%. And intrastate outward supplies made to registered or unregistered, it does not make any difference. Therefore, 50 lakhs plus 15 lakhs, total 65. On 65 lakhs, 9% CGST and 9% SGST. And whereas another point is there, IDC, this is opening balance of IDC that is available. For that, intrastate inward supplies, that means CGST and SGST that is paid on 10 lakhs will be added. And in the same way, interstate inward supplies, with respect to interstate inward supplies, value 5 lakhs. On that, 18% means 90,000 is IGST IDC. Whereas if you have the inward supplies from unregistered persons, you cannot claim the IDC. That's why there is no IDC that is allowed on these 2 lakhs. Okay, ma'am. And IGST on capital goods is also allowed. So this is the total IDC that is available. IGST 7,40,000, CGST 3,44,000, SGST 3,44,000. This IDC balance will be used to pay output tax payable. So IGST 5,40,000, CGST 5,94,000, SGST 5,94,000. So we should start the problem with IGST. So IGST output tax payable will be 5,40,000 and IDC available here will be 7,40,000. We are having excess IGST IDC. That's why there is no need to pay anything in cash. This excess 2 lakhs IGST IDC can be used to pay CGST or SGST. But we are utilizing it for the sake of CGST. After setting off this particular amount, 2 lakhs, still 3,94,000 is needed to be paid. For paying that output tax, we are having IDC of CGST 3,44,000. After utilizing it, remaining 50,000 is needed to be paid in cash. And with respect to SGST, there is no IGST IDC available. Therefore, the SGST IDC of 3,44,000 was utilized. After that, remaining amount 2,50,000 is needed to be paid in cash. In this way, the problem will be there in the exam and it will be asked in compulsory question. Okay, ma'am. And same model, you can do that. And next one is problem number 4. Mr. J purchases a product for 3,40,000 plus SGST and CGST at the rate of 10% each from Mr. Y. He adds 26,000 as his profit and sells to the customer by levying SGST and CGST at the rate of 10%. Calculate the cost to the consumer. Also calculate the net GST payable by Mr. J. So here Mr. J purchased a product for 3,40,000 and by adding his profit margin 10%, that means 10%. So what is the profit? 26,000, sorry. These are the GST rates, 10% CGST and 10% SGST. He sold it to 3,66,000. 26,000 will be added to 3,40,000. Therefore, it will be 3,66,000. So the purchase value or inward supply value is 3,40,000 and whereas outward supply value is 3,66,000. 3,66,000. Okay, ma'am. Okay, this is the point you should remember. So on that 3,66,000, what is the output tax payable? You have to compute it. And whatever the IDC available with you, you will reduce it from the output tax payable. And if any surplus is there, it will be carried forward to the next tax period. If any deficiency is there, that particular amount will be paid in cash. We will see that now. See this. So this is purchase value, 3,40,000. Generally, when IDC is allowed to you, the tax component will not be added to the cost. That's why 3,40,000 is the cost and profit is 26,000. The sale price will be 3,66,000. So what is the price that will be charged to the customer will be always inclusive of GST. Na? Therefore, on that, CGST 10%, SGST 10%. So, 36,600. If we add it, what is the amount we will get? 4,39,200 is the invoice price or cost to the customer. Okay. So, the output tax payable will be 36,600. And whereas ITC is available on 3,40,000, 10%, that means 34,000 CGST and 34,000 SGST will be there. After deducting it, remaining 2,600 is needed to be paid in cash. Remaining 2,600 is needed to be paid in cash. That is the point you should remember. Okay. And see another one. Mr. A has the output tax liability of 1 lakh rupees towards CGST and SGST. That means 50,000 CGST and 50,000 SGST. Output tax payable is there. And IGST is 20,000 towards IGST. And also interest payable of 1,800. Explain the manner of discharge of tax liability by Mr. A in the following two independent cases. ITC available of CGST and SGST is 25,000 rupees each and IGST is 25,000. And second one, ITC is not available at all in these two cases. So initially, what are the output taxes that is needed to be paid? CGST 50,000, SGST 50,000, IGST 20,000 and interest 1,800. Interest is to be always paid in cash only. Whereas with respect to these taxes, you can pay by ITC also. And ITC, if at all given, first the problem should be started with IGST, ITC. What is the IGST output tax payable here? 20,000. Say this. IGST output tax payable is 20,000. CGST 50,000, SGST 50,000, interest payable 1,800. Okay. And we are having first IGST ITC of 25,000. After setting of this IGST liability, we are having surplus IGST ITC of 5,000. This surplus IGST ITC can be utilized to pay CGST or SGST, but we are utilizing it for CGST. After utilizing it for CGST, still CGST payable will be 50,000 minus 5,000, that is 45,000. For paying this 45,000, we are having CGST ITC of 25,000. After utilizing it, remaining 20,000 is needed to be paid in cash. And in the same way, with respect to SGST, the point here will be electronic. With respect to SGST, the output tax payable is 50,000. Output tax payable is 50,000. And for paying that, there is no IGST ITC available. There is no IGST ITC available. And for that, there is no IGST, so we are utilizing SGST ITC. After utilizing it, remaining 25,000 is needed to be paid in cash. And in the same way, interest is needed to be always paid in cash. So this is the total amount that is needed to be paid in cash. But another question is there, sir, if at all there is no ITC available, total amount is needed to be paid in cash only. In that case, 1,21,800 is needed to be paid in cash if at all there is no ITC. Okay, ma'am. And another one you can see here. See problem number 7. Nos Limited reduced the amount of 2,25,000 from output tax liability as in contravention of provisions of CGST Act 2017 in the month of January 2020, which is ineligible credit at the invoice level. As a result, a show cause notice is issued by the CGST department under section 74 along with interest. Nos Limited paid the tax and interest on March 5th, 2020. Find the GST liability if any. Whereas this is with respect to January month. January month GST is to be paid on or before next month 20th, that is Feb 20th. But here interest is paid, but here the amount is paid on March 5th. So with respect to January, the due date is Feb 20th. But he paid the amount on March 5th. So how many number of days delay happened? From Feb 21st to until the amount is paid March 5th, 14 days delay happened. So what is the rate of interest? With respect to excess reduction of tax liability, ma'am? Yes, 24%. So what is the amount? 2,25,000 into 24% into 14 by 365. How much amount we will get, ma'am? 2071. This is the point you should remember. Okay. So this is a total story you have to remember with respect to this. And another one you have to see with respect to interest. I will show you another one. See the sixth one. If you want to have more clarity on interest calculation. Salty and Spicy Limited reduced the amount of 1,50,000 from the output tax liability against the provisions of section 42, subsection 10 of CGST Act 2017 for the month of April 20, which is ineligible credit. A show cause notice was issued by the tax department to pay tax along with the interest. Salty and Spicy Limited paid the tax and the interest on 31st July 2020. Calculate the interest liability. Ignore the penalty. Okay. So with respect to April month, what is the due date, month? May 20th is the due date of payment. But whereas amount is paid on July 31st. So from May 21st, that means next day after the due date, till the amount is paid, that is July 31st, how many number of days are there? 72. So for the 72 days, you are liable to pay the interest on how much amount? 1,50,000. What is the rate of interest? 24% per annum. Therefore, proportionately we have to calculate that. So 1,50,000 into 24% into 72 divided by 365, 7,101 is the interest that is needed to be paid. This is the point you should remember. Okay, this is end of the topic, payment of tax.